Welcome to Debt Free in 30, the show where every week we talk to industry experts about debt, money, and personal finance. I'm Doug Hoyes. Today we've got a great show for you because we're going to talk about probably the area that I get the most questions on by a wide margin, and that's credit reports and credit scores. Everyone's worried that, if I deal with my debt and if I have to go bankrupt or do a proposal or get a loan, it's going to somehow affect my credit score and then I won't be able to borrow again in the future and it's going to be horrible. Well, there are certainly issues with that, and there's certainly a ton of misinformation when it comes to credit reports and credit scores. So I've asked an expert to come on the show with me. So let's get started. Who are you? Where do you work? And what do you do?
Hello, Doug. Thanks for having me on today. My name is Eric Putnam. I'm the Managing Director of Debt Coach Canada, the health club for your wallet, and a former lending professional with 27 years in the consumer credit field.
Excellent. Well, thanks for being here, Eric. And I am familiar with Debt Coach Canada because, in fact, I have had you and your team in to talk to my professionals, because even though we're in the area of dealing with debt all the time, we're certainly not experts when it comes to things like credit reports and whatnot. And you've certainly provided a lot of practical information for my team so we can advise our clients. Why don't you give us a quick overview of exactly what is Debt Coach Canada? What do you do? What's Debt Coach Canada all about?
Well, basically, we're a financial coaching and education group. We started in 2005, initially meeting people face-to-face in our office in Oakville. And since then, it turned into an online platform, delivering our services coast to coast. Financial coaching covers a broad base, but part of that is the necessity of knowing what happens in the credit world, both on a positive note and how to manage your credit appropriately, but also dealing with how to correct any errors and make sure things are appropriate on your credit reports is very important for financial success.
Excellent. That's what we're going to talk about today. And for anybody who's listening, I'm going to put a link in the show notes so that you can find Debt Coach Canada. The website for Debt Coach Canada, I believe, is debtcoach.ca. Is that correct, Eric?
Yes, it is, Doug.
Debtcoach.ca, and of course the show notes are on our website at hoyes.com. That's HOYES.com, and I'll put links to everything Eric and I talk about today. So let's get started with some really basic stuff. What is a credit bureau? Is it some kind of government education or government institution? What exactly is a credit bureau? How do they work?
Okay, well, to begin with, there are two credit bureaus in Canada, Equifax and TransUnion. They're both subsidiaries of American parent firms that have been around for going on 40 to 50 years, give or take, depending on which one you're talking about. They are regulated federally under the Privacy Act, and provincially, each government in Canada, provincial government, regulates the credit bureaus. In Ontario, they're regulated under the Ontario Consumer Reporting Act. Basically, what it is a large database of various data picked up on a monthly basis by the lenders uploading information, as well as from public records. The bankruptcy cases, for an example, judgments, they're through courts, and what have you. And what a lot of people don't know is it's the lenders that choose which credit bureau to actually report the data to. So it's important that you know that there are two different databases, and the information may not be the same in each of them.
That's a key point. If I go to my dentist and don't pay my dentist, he might report me to one of the credit bureaus but not the other. So I could have different information on both credit bureaus. That's what you're saying.
That is exactly correct.
Okay, so what information then is on a credit report? If I was to get a copy of my credit report, what would I see on it?
Well, to begin with, identification information, things like your date of birth, address history, employment history, history of all your credit applications going back generally 2 to 3 years, depending on which credit bureau we're referring to. Those are referred to in the industry as inquiries. History of all activity reported by the lenders, and that's referred to as trade lines. And as I said earlier, the lender themselves choose when and which credit bureau report this data to. So some report to one of them, some report to the other, and some report to both. You have no control over that. That's up to the lenders. They're under contract with the credit bureaus. You just mentioned something, a collection that could have been assigned to a third-party collection agency. Public records such as judgments, insolvencies, bankruptcies, consumer proposals. Registered liens, right from when a bank puts a lien on a vehicle, for instance. That should be showing under the PPSA regulations in Ontario. It could also be a statement that you've uploaded through their forms that's available from their websites, explaining any issues they've had or causes of problems you've had in the past. You have a right as a consumer to actually share that information so that lenders, when they're checking your credit report, can see your story. Generally, it should be kept to a 50 to 100-word maximum, but it's very important that you know as a consumer you have that right to also put your story on there.
What about my mortgage, Eric? Is that going to show up on my credit report?
Actually, that's a very important point. Unlike the U.S., in Canada, mortgages are not shown, generally speaking, on credit reports. And the reason for that, coming from the mortgage industry myself, which I found very interesting, is that it's well known in the financial services industry that the lender who holds your mortgage generally is going to get more services sold to you. So they don't want to share your mortgage history with their competition to prevent the other lenders from soliciting you for a mortgage transfer. It's all about sales, Doug.
Interesting. All about sales. So, well, I think that's kind of a key message here. So what you're telling me is the credit bureau is, number one, it's not a government organization. It's a private organization, and it's a business. And that business primarily is funded by the lenders. It's the banks who are paying for this information, and therefore the credit bureaus really exist to help the lenders. Is that an accurate statement?
Exactly correct. As a consumer, you have rights, but you're not the credit bureau's customer.
Very important. You're not the credit bureau's customer. Okay, so we've talked about the raw information that's on a credit report. Explain to me this whole concept of credit score, because everyone's really worried, oh, my credit score is bad. I need a better credit score. I need a high credit score so I can get a loan, whatever. Exactly what is a credit score? How is it calculated? What can you tell us about credit scores?
Well, to begin with, credit scores have been around for about 40 years, but have only been used widely in Canada since the mid-90s. I can remember back in the day of actually being introduced to the credit scoring systems of Equifax and TransUnion when I worked in the banking business. It's basically a numeric number between 350 and 900, 900 being perfect. The average credit score in Canada generally is 700 and higher, but roughly about 30% of Canadians have a lower than 700 credit score. And how it's basically used for mortgage purposes today, a lot of people don't know this, but the government came out in 2009 and for the first time ever brought in a minimum credit score requirement of 600 for the primary applicant on any mortgage applications that are insured by Canada Mortgage and Housing Corporation. So credit score can, for all intents and purposes, be used by lenders as an arbitrary way of saying the first step is you got to pass that hurdle, having a minimum credit score. And each lender uses their own algorithm and then basically come up with their own scoring mechanism based on the data that's in your credit report. And it varies dramatically from lender to lender and is used even by the same lenders. You could actually have internal credit scores different if you're applying for instance, a credit card, a car loan, or a mortgage. Each department could be using an internal scoring system based on the same credit report and coming up with 3 different sets of numbers.
Wow. So what are the components that go into calculating a credit score? What kind of things are they looking at?
The risk profiling system basically starts with your payment history, which represents about 35% of your score. So, for instance, if you've had any late payments, that will be included in that. 30% is your ratio of how much you owe compared to how much your limit is on a credit card or a line of credit. So, for instance, let's say you have a $10,000 credit limit and you owe at a given point in time $9,000, you're using 90% utilization, which is not good. It should be kept below 30%, typically is what we recommend. The next one, the next big hurdle is 15%, is how long you've actually had a credit history on the credit bureau. And the last 2 are if you've applied for anything relatively new, that's 10%. And the remaining 10% is a type of credit, meaning a combination of both revolving and installment credits. So it's basically very heavily weighted on payment history and your utilization, 35 and 30% appropriately.
So paying your bills on time, not using too much of your available credit. So, okay, I'd like to talk about some practical things related to credit scores, getting loans, how you can improve your credit score. But before we do that, we're going to take a quick break and then come right back with Eric Putnam from Debt Coach Canada. My name is Doug Hoyes. You're listening to Debt Free in 30. Welcome back. This is Debt Free in 30. My name is Doug Hoyes, and my guest today is Eric Putnam of Debt Coach Canada, and we're talking about credit reports and credit scores. Before the break, Eric, you said that your credit score is based largely on your payment history and the amount of credit that you're using. So if you've got a long and good credit history, that's going to be good. If you've got a credit card with a $10,000 limit and you never go over $2,000, that's going to be a lot better than if you're always maxing out. Can you give us maybe some practical examples? I like this show to be practical and focused on some real life examples. So, I don't know, talk to me about car loans. That's something that everyone out there gets at one point in their life. How do credit reports and credit scores impact on my ability to get a car loan?
Okay, that's a really good example of everyday use. Many lenders have minimum cutoffs, again, for personal loans. Varies from lender to lender. I know that one particular bank, they have a minimum cutoff of $650 for any kind of a personal loan application. Just recently did an analysis for somebody and for a presentation that we used. I'll give it to you simply. $15,000 car loan, 4-year repayment schedule. The applicant with a credit score of 720 would be approved with 0% down. This is a used car at 4.8%, giving them a payment of $344 a month. Same people, but the only thing different in their life being that their credit score is now 590. They would need 10% down, and the interest rate would jump from 4.8 to 16.5%, and their monthly payment by about $85 a month. Exact same people one more time as an example. Much lower credit score of 490. Down payment becomes 20% down, 29% interest rate, and a $531 payment. So if you take the person with a good credit score of 720 compared to the low end of 490, that same car, Doug, ends up costing $8,991 over 4 years, more interest.
Wow. So having a good credit score is critically important. And the best person you're using in your example, that person with the 720 credit score, you said in the first segment before the break that the perfect credit score in Canada is 900. So 720 isn't the greatest credit score in the history of the world. That's just a good credit score is what you're saying.
It's just average.
It's just average.
It's basically an average. There's nobody in my 30 plus years in the business have I ever seen a 900 credit score.
It just doesn't happen. So
it's very difficult to get it much higher than 800, to be honest, because and also it's not a static number, Doug, something that I should have mentioned earlier. It's a number that's based on that particular day when the lender or the consumer pulls the information. So the score today could be dramatically different than the score a month from today.
Because
good or bad.
It's constantly changing. It's constantly being updated.
Based on the data it's in your report.
Gotcha. So, okay, you're telling me then that if I've got a credit score of 490, then I might as well not even bother going to finance a car because I'm going to have a big down payment and I'm going to be paying 29% interest. Whereas if I can get my credit score into the average range around 720, then all of a sudden I'm going to qualify for little or no down payment, a reasonable interest. So I guess the obvious question then is, what are some practical, tangible ways that I as a consumer can take to improve my credit score?
Well, to begin with, my personal opinion is that if you have issues on your credit report, you need to take action to, as we call it, clean them up. Look at what the issues are, come up with a game plan, reach out to professionals for guidance wherever they may be, and don't try to be an expert in this. Frankly, there's a lot of information that can be very confusing, but there's ways to get yourself educated, which I'll be happy to share with you at the end of this presentation that we're going through. But the point I'm trying to get to here is that start with what is on your credit report, meaning that you need to get your free reports from both bureaus, get them, go through them, make sure you understand what's on there and make sure the information is correct. There is an appropriate way as well for that information to be, if there's errors, to have them resolved.
Okay, so step number one is you've actually got to get a copy of your credit report.
which I encourage people to do for free.
For
once
free.
a year.
Okay, and that's another key point, because I see all these ads all over the place that I can do this credit monitoring thing and it costs $20 a month, or I can get my credit report for $50 or something like that. You're saying no, what I want to do is get a free one. Is that correct?
Yeah, actually on the credit bureaus themselves, they don't make it easy to find the free reporting link, but by law they're required to give you a copy once every 12 months for free.
Once every 12 months for free. So what we'll do in the show notes over at Hoyes.com is I'll put a link to both credit bureaus inside their site where you can actually get the forms, get the information to get your credit report for free, so you don't have to navigate through. And you're absolutely right. When you go to their websites, the first thing you see is here's, click here, $49.95 when we got the whole program for you. So you're saying no, get the free one. That's the starting point from both agencies, both TransUnion and Equifax, because they both could have different information. You get them, you look at them, and if there's obvious errors on them, let's start with that. So there's an obvious mistake. There's a debt that was never mine. There's a debt that I paid off long ago. What's your advice then on how you can have errors removed from your credit report once you've already got your free copy of a credit report?
Okay, just on that note, there is no data available in Canada, but there was a report done by the U.S. federal government in 2012 that indicated about 20% of the American population had errors resolved on their credit reports after they went back to the credit bureaus and pointed these out. In Canada, there's no data, so it's anybody's guess. But there is a dispute forms that you can get completed. The credit bureaus themselves have to investigate it with the people that provide the data to ensure whether the information is correct or not. And if they cannot get clarification, by law, the information is supposed to be removed within 60 days. And then it's very important that you also follow up with them. Don't just send it in, the dispute form, but make sure you diarize it and follow up and get a copy of your report sent back to you indicating that these errors have been resolved.
So get a copy of your credit report. And when you get that free credit report, it's going to come with
an explanation.
Yeah, and it's going to come with the dispute form. Am I correct on that?
Yes, it's supposed to come with the dispute form, correct.
It's supposed to. So you can just look at it, fill it out, and say, okay, this is wrong. Here's why I think it's wrong. Provide whatever proof you've got. Send that in to them. And then, like you say, you got to wait a month or whatever, follow up to make sure that they've actually corrected the error on your credit report. So that's something that you can do yourself.
Correct. You do not have to pay anybody to do it.
Don't
in
have
fact,
to pay.
I encourage people not to.
Okay, that's very important. So there you go. There's some practical advice. You can fill out the dispute form yourself. Doesn't cost anything. You don't have to hire anyone to do that for you. So let's say I've got my credit report. There are no obvious errors on it, but maybe I've had some issues in the past. Can you give us one tangible thing that the average person could probably do to improve their credit score? I mean, is utilization the number one thing you'd focus on?
Well, for instance, one thing that's been recently brought forward in the industry is even cell phones now report on people's credit reports. From at least Bell, Telus, and Rogers are reporting monthly cell phone charges. Now, when you think about it, that's not technically credit, but they are advancing you, as long as it's not a prepaid phone, they are advancing you month-to-month credit for usage of your phone on a contract, right? So cell phones are one thing that definitely report now. The other side of that coin, if you don't pay your cell phone bills, it will negatively affect your credit score as well. So it's important you know that. Secured credit cards are an option for people after having some serious challenges. That's the starting point. Generally you can get them $500, give or take, put a deposit on the table and start using them. Put your gas on it, put your monthly cell phone charges on your credit card, pay it off every month so you're not paying any kind of interest charges. Ourselves, we built a program in conjunction with a financial institution called Credit Builder Plus that is designed specifically to help people proceed down the line to getting an insured mortgage. And it's a total program that's available at creditbuilderplus.ca that frankly has assisted hundreds of people in Ontario qualify for a mortgage. It's a step-by-step process. Depends on what your goals are, and each person has to look at their own needs, Doug.
Okay, and so what we'll do is I'll put a link in the show notes to, you said it was creditbuilderplus.ca?
Correct.
And that's a program that's offered by Debt Coach Canada, I assume, that helps people progress along the path. So, well, I think that's some very good practical advice then. So what we're saying is get a copy of your credit report, see what's on it. If there's errors, you can fix them yourself. And things like paying your bills on time, even something like your cell phone bill, which may not be a huge bill every month, but a lot of them are now reporting to the credit bureau. So having that information current and up to date and not being behind is very important. And then you also mentioned utilization. You want to not use all the credit that you've got. If you've got a credit card with a $10,000 limit, pay it off every month. Try not to go over $2,000 or $3,000 a month on it. That's going to help your credit score. So that's great. Those are some very practical things. I appreciate that, Eric. I'm going to put some notes in the show notes at hoys.com so people can find all this information. Thanks for being with me today.
Thank you for having me, Doug.
Great. Thanks, Eric. We'll be right back to wrap it up. You're listening to Debt Free in 30.
You're listening to Debt Free in 30. Here's your host, Doug Hoys.
Welcome back. It's time for the 30-second recap of what we discussed today. My guest today was Eric Putnam of Debt Coach Canada, and he explained how credit scores are calculated and how a good credit score can greatly reduce your cost of borrowing on a major purchase like a new car. Pay your bills on time and keep your utilization low to improve your credit score. That's the 30-second recap of what we discussed today. So, what are my thoughts on credit scores? I agree that you want a good credit score if you plan to borrow money, but let's not lose sight of the flip side of that statement. If you aren't borrowing money, your credit score generally doesn't matter. We've discussed it before. Credit scores are for the bank's benefit, not yours, so don't obsess over your credit score. Yes, if you need to borrow for a car or a house, a credit score is important, but saving money and living frugally is much more important to your overall financial well-being, and that's where you should place most of your efforts. That's our show for today. Full show notes with links to how to get your free credit report are available on our website at hoys.com. That's HOYES.com. Thanks for listening. Until next week, I'm Doug Hoys. That was Debt Free in 30.